Hello and welcome to BK Pramami Raldaria. Overall, major mayhem in terms of markets are concerned. We've not really held on to what the way we opened this morning. It's a third consecutive session of declines that we're seeing in Forces, ICICI Bank, Reliance Industries, as well as HDFC Twins. These are few of the counters which are actually pulling Nifty lower by little over 100 points coming in there. In fact, if you see the Nifty Auto Index as well, it's the third consecutive session of fall coming in terms of the auto major. Nifty, we are below that 17,200 mark, and this is nearly after 5 months. Now, the Feb low was 17,255, and whether we will close at 17,100 or below 17,100, that's something we need to wait and watch because we're pretty close to those levels. Bank Nifty has also breached February lows of 39,600. What this actually means in terms of the SVB saga for the markets and what are we watching out for? Joining us on the show today, we have Ruchit Jain, CMT Lead Research Analyst at 5 Paisa, joining in. Ruchit, welcome to the show. Ruchit, what's happening with the markets? Because third consecutive session of fall, majority support levels have been given up as to what everyone was watching out for.
Yeah, hi, very good afternoon, Hiral. And no, first of all, thank you for having me on your show. Yes, I think this is more of a impact of the global spillover that we are witnessing. No, post that all that news flows in the US markets. But primarily, if you think the main reason for our down move of late, last 2 or 3 months have been FIS selling in the index futures. So whenever they have been on the short side in the index futures segment, our markets have seen a price-wise correction. And the recent up moves as well in the month of February, when initially after the budget day, we managed to recover from that low of 18,000 to 300 odd levels to about 17,300 to 18,130. So that was main because of short covering, where FIs trimmed some of the short positions in the index futures, but no long formations were there. Then we corrected, market went towards 17,250, and again a pullback move was seen towards 17,800. So both these pullback moves not towards that 18,130 and 17,800 were more because of short covering, and no fresh long formations were seen. Now we are witnessing formation of fresh shorts in both Nifty as well as Bank Nifty along with the market fall, and FIs continue to trade with most of the positions on the short side. So I think this is a bit of negative and concern for the markets. Now 16,900 to 17,100 is a crucial support zone, as we can see a falling trend line support coming in down there. So the momentum as of now is negative, but it needs to be seen whether maybe in a day or two the 16,900 continue market manages to hold on 16,900 support or not.
Right. So, Ruchit, from today's closing basis, if you go to see, we're pretty close to the 17,100 mark. I think 17,123, 17,130 where we are trading at. Do you anticipate a closing at 17,100 or below 17,100? Do we see that pressure in the next 10-15 minutes?
Yeah, quite possible, because the way index heavyweights are still in pressure. The Reliance Industries, one of the heavyweight has broken its previous swing low supports. Even if you look at HDFC Twins, those are witnessing selling pressure. ICICI Bank is under pressure. So many of the index heavyweights are witnessing this selling pressure along with the broader market selling. So I think due to this, market at least in today's rest of the half an hour session, they would continue to remain under pressure, and it should close at lower levels.
Right. And overall, if you see major pressure that's coming in from Bank Nifty as well, in fact, Bank Nifty has actually breached the February low of 39,600 as well. Where are we seeing that bottom formation now?
So if we look at last 1.5 years, so that the theme of the international markets, the sectors which are underperforming in the international markets have been impacted in our markets too. For example, if we take last entire year, from that October 2021 to November 2022, the IT space had corrected very sharply in the US market, where correction in the Nasdaq was very sharper than most of the other sectoral indices. So due to that, Nifty IT index underperformed in our markets too. Although relative correction was lower than what we saw in the US, but as a sector as a whole, we saw that underperformance from the IT space. So now, since the negative news from the US is from the banking space, so we have seen that banking stocks have corrected sharply in the US. So I think that's why we are witnessing that more selling in our banking stocks. So although we may not have direct correlation with that, but it's a sentiment which is getting impacted, and due to that sentiment impact, the sectoral rotation is happening. So I think Bank Nifty as of now, until we see cool off in the global markets again, that would continue to remain under pressure. 39,420 was the swing low, which was formed which was formed during last bottom. So I think that 400 or 420 low, if gets breached, that could result into some more unwinding of long positions, as many of the stop losses would be placed below those levels.
Right. So, Ruchit, overall, if you see in terms of Nifty itself, it was trading in that broad range of 600 to 800 points, right? Which has now shifted on the downside. Now, have we opened the floor for further downside pressure to witness levels of 16,500 to 16,900? Because 16,900, yes, is going to be an interesting support level that we need to watch out for. But has that range shifted downwards? And secondly, clearly, the banks are dragging the markets. There is some bit of nervousness due to the SVB fallout as well. And we've below that 200 DMA for the first time since July 2022 on Bank Nifty as well. So what is that low that we could see, that shift in range for both Nifty and Bank Nifty?
So as of now, I won't be open for that 16,500 mark, primarily for a couple of reasons. The recent underperformance in the equity markets have been more led by the rise in the dollar index and the rise in the bond yields that we have seen. All the investors or traders were worried when the US bond yields had crossed that four mark again, during last week or about 10 days ago. And if we see in last 2 or 3 trading sessions, the bond yields in the US have cooled off quite significantly. In fact, from that four, the bond yields right now have corrected and trading around 3.54. So I think that is one of a bit of positive for the equity markets. Secondly, even the dollar index, after that correction from 115 to 100 mark, we witnessed a pullback move in the dollar index, which was a concern. The dollar index also started cooling off from 106 to 103, 104. It's back again. So if it's a dollar bear market which has been resumed, if the dollar index has resumed its downtrend, so somewhere that would provide support to equities going ahead. So I think the downside price wise, which would happen from here on, I would be very crucial to that 16,900, 17,000 would be very crucial to watch out, because the other factors internationally such as bond yields and dollar index are turning favorable for the equity. So only if those levels are broken, then I think one should open up for further lower levels. Otherwise, there are fair chances of a pullback move again from those levels.
Right. In terms of stock specific action, if you look at the banking pack, IndusInd Bank is one of the counters which is putting a lot of pressure in terms of Bank Nifty as well as markets as well. What would you advise? Would it be time to book profits and just move out and probably trigger your stop losses? Or would this be an opportunity to buy on dips kind of a strategy within IndusInd Bank?
So if one is a short-term trader, then I think the swing low support of 1,067, 1,070 has been breached. Also, today's selling, if you see post gap down opening, has been backed by higher volumes. And whenever we see stocks selling coming with higher volumes, those stocks tend to underperform in the short term. So I won't advise doing any bottom fishing in IndusInd Bank as of now. But yes, within the large cap space, if one is looking for any mid to long term investors, then I think other heavyweights such as ICICI Bank could be a better option over IndusInd Bank.
Right. And how are you seeing an Infosys as well? Because there is tremendous pressure that's being built on an Infosys. What's the range looking like for an Infosys?
So our IT companies too have been witnessing momentum according to the Nasdaq index. So when we witnessed a good pullback move in the Nasdaq last couple of months, we witnessed a pullback move in IT as well. Now again, Nasdaq has broken its support and is under pressure. So have our IT companies underperformed in last 1 or 2 weeks. So as far as levels are concerned for Infosys, 1,400 would be the crucial support for Infosys. But I believe that the price-wise corrective phase may have been over around that lows that we witnessed in Infosys in the month of September 2022, and this correction could lead to more of a time-wise correction in the short term. So I'm not expecting those previous swing lows to get broken again in Infosys, but yes, some time-wise correction could be expected for next few weeks from here on.
Right. Apart from that, if you see the other banking names as like the likes of an IDFC, AU, as well as specifically these two counters, and if you see a RBL Bank as well, major pressure coming in terms of today's session as well. And if you see the open interest built up as well, that seems to be pretty strong on these names. What would you advise on these counters?
So the short formations have been seen there, and these are all high beta names. Whether you take Bandhan Bank, RBL Bank, AU Small Finance Bank, when they move up, if the Bank Nifty is up by about 900,000 points, then I think we see a good outperformance from these names. Now today, when the Bank Nifty is down by around 1,000 points, So certainly, these stocks would take more beating now, more beating than some of the other large cap names. So unless we see a shift in the momentum or a trend reversal again, I think the stocks would continue to show some pressure. So one should not do any kind of bottom fishing in these names for now.
Right. Ruchit, what about the Reliance Industries? Because that's something which is also putting pressure in terms of markets overall. Not seeing major moves coming in from that counter. And if you see, around 14 to 15% is the kind of open interest addition that we're seeing in intraday trade right now. Stock is down around 2%.
So quite interestingly, last two times the Reliance Industries had managed to bounce back from the 2300 mark. Whether you take in the month of September 2022, where it bounced from the 2300, and even recently in the month of February 2290 was the low for Reliance Industries. But today that low has been broken, so a lot of long unwinding could be seen in the stock in next one or two trading sessions if it doesn't manage to reclaim that 2300 mark on closing basis. So if it closes below that level, I think some sort of panic selling would coming in the Reliance Industries that could lead to some more pressure, maybe towards 2240, 2200 in the next few days.
Right. Ruchit, if you see in terms of the IT index as well, 29,200 is an interesting level that we are seeing the IT index trade at. What is the chart and what is the FNO data indicating from an IT index perspective?
So we have seen more of a long unwinding in some of the IT names in last 1 week. So not aggressive short formations are there, except in some of the couple of names such as Emphasis is there, where some short formations have been seen. But if you see Infosys, TCS, HCL Tech, the heavyweights, that more of long unwinding has been seen where open interest reduction was there. So there are no fresh short formations, which indicates we are not likely to see some very serious price-wise corrections in this sector. Yes, some of the stocks could underperform, such as Emphasis, where we have seen short formations. But overall, I think 29,000 would be very interesting level to watch out for Infosys. And if that doesn't hold, then 28,400, 28,500 would be the next level where the support would come.
Right. So that's in terms of stock specific action. But if I have to come back to, Nifty as well as Bank Nifty as well, clearly it seems that we are seeing some bit of time-wise correction as well, in that broad range already. 17,250 was seen as an important support, which if breached, we could see pressure, as you mentioned, to 16,900 to 17,000 levels already. But on the flip side, is there any possibility of a pullback rally, until the index breaks above 17,800?
So some in between pullback rallies could be seen. 17,300 to 17,350 now would be the resistance on any kind of small pullback rallies. And as I said, the some of the factors such as dollar index and the US bond yields, which are turning favorable for equities. So that I think should not be ruled out, because many traders were watching those levels when the markets were not performing. That the bond yields are going up, and hence the equity markets are going up. So those factors have reversed. So I think once this panic selling gets off, then certainly some pullback moves due to those factors could be seen in next few days.
Right. And Ruchit, overall, when you mentioned about the dollar index as well as the US markets, see, Europe has opened lower. In fact, an interesting move that we saw in the US futures as well is that in the morning trade, US futures were up. Now we are seeing cuts of almost 300 to 400 points coming in, a little more in terms of US futures as well. So that's setting a trend line in terms of what could be expected in terms of early morning US trade. Now, if that pressure in terms of US markets also continues, how big a possibility of a further downside pressure is the chart indicating? Because clearly a negative US close with major cuts could probably let us to breach 17,900 16,900, I beg your pardon, in tomorrow's opening trade as well, right?
Yeah, so if we see a very deep cuts in the US markets tonight, then that could lead to some no damage in the opening. But no, for tomorrow's session, since today we have already corrected from that 17,500, we opened around. We should not forget that we too opened around that 17,500 mark, and from there we are to 17,150 now. And just couple of days ago, I mean last 3 or 4 trading sessions ago, we were around 17,800 mark. So we have already seen some price wise correction. So if we see such gap down opening tomorrow around that 16,900 mark, so rather than gap, I would watch for that follow-up move, whether we see follow-up selling post that gap down opening on that. And in case if we see follow-up selling below 16,900, then of course that would be the factor to worry about.
Right. And similarly, in terms of Bank Nifty as well, will it be a similar pattern that we should be watching out for in tomorrow's session?
Yeah, so as I said, the banking space would take cues from the global markets where, in the US markets, if the banks continue to, underperform, then I think
Hmm.
the underperformance or the selling pressure would continue in the Nifty Bank Index or some banks here as well. So it's more of a sentiment impact which, would happen in tomorrow's session as well.
Right. Apart from this, from today's market perspective, Ruchit, anything that catches your radar, which could be buy on dips kind of a strategy? Because clearly, yes, there are opportunities to buy as well at current levels, seeing the kind of sell off that we've already seen. What would your view be?
So I think one should look for such stocks which are not correcting in this falling market. So ideally, that relative outperformance if seen in any of the stocks. So whenever the market resumes that up move, those could be the sectors or the stocks which would take the leadership in the next leg of up move or a pullback move in the markets. And if I
Hmm.
look at the stock specific or the sector specific movement, then oil and gas sector has been witnessing a relative outperformance. You look at ONGC, GAIL, or even OMCs such as HPCL. No, these are not showing any kind of price wise corrections today. So
Hmm.
those stocks which are showing relative outperformance in such falling market, I think if one has to take any kind of buying opportunities, then those should be the names where one should watch out for. Even if you look at some of the metal names such as Jindal Steel is there, or NMDC, Nalco. These are not showing any kind of weakness. So falling dollar index also is for one of the things which would be positive for metals going ahead. So these would be the two sectors or which I would watch out for in case of any reversals comes in the market. Then outperformance could be there.
Right. And any stock specific action apart from the metals and the oil and gas space, what would you advise to do with the tech Mahindra? Interestingly, that is holding pretty strong in today's session.
So quite interesting, if we look at last 15-20 days, then the move in the Tech Mahindra was supported by very good volumes. Of late,
Hmm.
we backed by some of the research brokers by recommendation, we witnessed very good volumes in Tech Mahindra in mid-February, where the stock rallied from 1010, 1020 to 1150 in just 3 or 4 trading sessions. And post that, when correction came from that 1150 to 1050, which we saw in Friday's session, that correction did not see any rise in volumes. And even in derivative segment, long positions were there, which were formed during that mid February. Those still seems to be intact. So I think this structure is quite positive. And from the IT names, I think Tech Mahindra would continue its outperformance going ahead. So Tech Mahindra, I think if when anyone has bought, they should continue to ride on this trend. And in fact, if we see any kind of decline again in the next leg of correction in Tech Mahindra, then that should be used as a good opportunity to add on to the portfolio.
Right. So that's with regards to Tech Mahindra as well. And, Ruchit already explained to us that could be what could be in store in terms of markets in tomorrow's session. Thank you, Ruchit, so much for joining us on the show.
Thank you.
But
Thank
clearly, as Ruchit was mentioning, if there is major correction coming in terms of the US markets, and if we do see a gap down opening in tomorrow's session, clearly watch out for further selling pressure because that could be a point of concern overall from a market perspective. And banking counters will clearly be taking its cues from the way banks are reacting in the US as well, because it's the smaller names which are actually taking a hit. In fact, three of the banking names as well in the US, where there has been major mayhem. But overall, if you go to see in terms of markets right now, as we speak, as the first question that we had posed as well, that will we see a close below 17,100 or at 17,100? That does not seem to be the scenario because we've clearly recovered almost around 50 points from the day's lowest levels. 17,113 was the day's low on Nifty 50, and we are now trading at levels of around 17,168. So that's a mild recovery coming in on that front. In terms of Bank Nifty as well, we're still continuing to trade below those February lows of 39,600. 39,553 is where we are at in terms of Bank Nifty. In fact, we did hit a low of 39,454 on that front. Clearly, in terms of stock specific action, if you go to see from Bank Nifty as well, all counters are in the red. IndusInd Bank, AU, Small Finance Bank, PNB, SBI, as well as Bandhan Bank. These are the top losers in terms of Bank Nifty as well. And if you see, as of now, in terms of where Nifty 50 goes, it's only Hendra, which is one of the strongest players, seeing gains of 7.5%, but other counters, marginal gains coming in for an Apollo Hospital, ONGC, as well as Britannia. So not to be really considered. If you see in terms of Sensex as well, cuts coming in on that front as well. Sensex is down almost 960 points as we speak, and you have the broader markets also, which are under pressure. It's only the metal and the energy pack that was actually holding on. In fact, metal was one of the gainers, which was marginally trading in the green. It slipped in the negative as well, but they are a few of the outperformers which are not being hit specifically with the kind of mayhem that we are seeing in terms of other sectors. Auto index, third consecutive session of fall that's coming in on that front as well. So majorly, clearly the markets are in a free fall in today's session, but the way US markets open and the kind of moves that we see there will be something which will help us understand as to what could be in store in tomorrow's session, and whether 16,900, that's an important support level for Nifty 50, that is held on in tomorrow's session or not. That's all that we have on this session. Thanks for watching.